On to the next management now. Union Bank reported a weak set of fourth quarter earnings. Operating profits have declined. Slippages have increased. Deposit growth, though, is healthy. Margins have also improved. We have the management with us. We have Manimekhalai is the Managing Director and CEO of the bank. He's joining us right now. Ma'am, thanks very much. Good morning. Great to have you with us here. Thank you very much for being here on CNBC TV18. You know, before I get to the numbers and address what you've done and what you'd like to guide for the full year 25, if I can start with something which I think has been on the market's mind for some time, which is, you know, what the RBI is essentially asking all lenders to do, which is raise their standard asset provisioning to 5% on project finance. You know, we spoke with the managements of SBI, we spoke with the managements of PNB, etc. as well. Would you like to tell us what is your exposure at Union Bank to project finance, and in what shape or form will this, if this is implemented, because these are still draft rules, if this is implemented in this way, impact you?
Yeah, as you already mentioned, these guidelines are still in the very draft phase, and they're going to propose the increasing of the provision requirement. Now, in our bank, the project finance loans make up to about 28% of our corporate loan book, within which 68% of the projects are already completed, and we are seeing steady cash flows. So I think the RBI guidelines, which is now currently in the draft stage, the impact will be what we find is, it will be manageable, assuming the RBI finalizes the guidelines as it stands. So anyway, we have also sent our feedback to the RBI, and we are hoping that the regulator will take a prudent view on this matter.
Okay. Ms. Manimekhalai, thank you so much for joining us. I want to talk a little more about the business as well. The slippages have actually gone up quarter on quarter. Which is the segment where you saw an increase in slippages, and where are you seeing maximum pain right now? And what's the average slippages that you expect in FY25?
Yeah. See, slippages has been consistent in the last 3 quarters, of course, if you see June, September, and the December quarter. But in the March quarter, we had seen a little bit of increase in the slippages in the agri and the MSME sector, of course. Agri, because of the seasonality of the industry, we usually see a slippage in the last quarter. And MSME was a little more. You can say about, it's almost like 8 to 9% increase in the slippages. MSME slippages, I'm not very much concerned, because these are all high, fully collateralized and, covered by CGT-MSE growth. And as I see the growth in the sector also, the MSME slippages will come down over a period of time. Agriculture sector also, now that the, harvest season will also commence, and then, cropping season will come up. I will see that, these slippages will also come down, and we will be able to give fresh advances also to this sector. Going forward, also, we will be able to maintain our slippages quite considerably as, what we have seen in the last year also.
So the reason I'm asking is because in the agri sector where you are seeing some pain, right? I mean, I understand that you're confident that things may improve, but some of the sectors like tractors, for example, have been really very weak. And the guidance that are given out by the management also indicates that there may not be any growth in FY25. So how are you so confident that there will be recovery here? And slippages per quarter for you has gone to almost 3,300 crores. Is there a possibility that it could get worse before it gets better?
See, if you look at the kind of loans that we have in the bank, the KCC constitute a major part of the loan, and then remaining is, of course, the AFI, the agriculture infra, and the allied industries. That is the way our agriculture is, sector looks like, and substantial number also comes from the gold loan sector. Now, as I go forward, we are giving a lot of impetus to agriculture infra fund towards, giving, rural go down and other sectors where I will not see that kind of a slippages. Whereas my focus will be, of course, on the KCC, which forms a large part of the credit. And we have also started STP journeys in the agriculture sector, especially up to 1.6 lakhs. We have started the STP journeys in Karnataka. We have started the STP journey in Madhya Pradesh. And we're also in the phase of doing it in UP also. Wherever the land records are digitized, we're looking at, digitizing the agriculture sector also. So I'm sure that we will be able to take care of the slippages in the agriculture sector also.
All right. Ma'am, you're sounding fairly confident with regard to the outlook from here on, but give us a couple of numbers. what should the slippage number look like for FY25? And we could wait against the recoveries because that could be relatively higher. If you could give us an absolute number on both these two.
Yeah. See, my slippages number that I have given guidance for the current FI is, of course, 11,500 crores. I slipped close to about 11,800 crores in the last year. And the year before that, it was about 12,500 crores. Year on year, my slippages are coming down for very many reasons that I have put a lot of structures in place. Like I have the feet on street, I have got the RCOC, I'm building a very agile call center. There are so many things that I have taken care. So I'm sure that my slippages will be, controllable even in this quarter also, in this year also.
11,500 crores of slippages, and how much of recoveries will be what? I think that's a higher number, around 15, 16,000 crores.
Recovery, 16,000 crores is what I am looking at this year also.
Okay, and your gross NPAs as well, you're expecting it to improve. Does it come down closer to around 4%?
Yes, it will be less than 4%. We had given a guidance of 6% last year, but I am at 4.76 as is March 31. And this year I have given a guidance of less than 4%, and I'm sure that I will be able to achieve those numbers.
Okay, that's very confident there. What is your outlook as far as net interest margins are concerned for the full year for FY25, and what are we looking at in terms of credit costs?
Yes. Net interest margin, I'm looking at something like 2.8 to 3%. Last year, we gave a guidance of 3%, and I was able to do 3.1. But this year, because we are looking at, probably a rate cut, probably in the second or the third quarter of the year. And so I'm looking at a NIM of about 2.8 to 3%. And credit cost, it had a slightly deteriorated in the last quarter because of course, the slippages. It went up to 0.66. So I'm looking at something less than 1% in the current year with regard to slippages also.
Well, we appreciate when you give us numbers with regard to the outlook. So that's good. Leave us with the final number. What is the loan growth likely to look like for the coming year? I believe in low teens.
Yeah, the loan growth, we are looking at projections of GDP growth at 7%. Usually the thumb rule is, twice the number or 1.5 times the GDP numbers. So advances growth, I'm looking at 11 to 13% in the current year.
All right, ma'am, we'll leave it there. Thank you very much for your time. Great speaking with you, and good luck. It's a pleasure.